review. Yeah, we're gonna do another review. I made money today. Kind of hairy though, but I stopped. I told myself I could trade this. I don't want to trade this. Look at that! It jumped 8 ticks, 835. Right. I don't want to do that. Let me pull my shades down. Oh, something I'll say for the sake of saying it before we be. You know what? I was gonna put it in a separate video. I'll say it. Never mind. Who cares? Because it's an advantage for me and not for you. That's why. And I already know it. So why would I tell somebody? First short is 92.75. I'm looking for the standard absorption. 10 at 75. 11 then. 13. Notice how they print 1 at 93. That's good. That's what I wanted. And then I'm thinking the reason I'm in this trade is because 10 showed up at 75 on the inside prints. So if we get past up to 30 93.25, the signal's really not there anymore. Trading against people, it's only good for 1 to 3 ticks. Typically, mainly it's two ticks, if that. So if we go 2 3 ticks in the opposite direction, even if market makers pull and hunt for liquidity, that means I was wrong. That's why I get out of there. Notice how 12 is absorbed at 92.75. We get up there. We're forming a distribution to the upside now. I get short here, and I immediately take like a super martingale trade first thing into the session. Notice how we're away from VPOC at 88.50. We're in the thin spots of no man's land that I'm offside. So what I'm really waiting for is buyers to be exhausted and to mark a top through their exhaustion, because sellers and buyers at the bottom of markets make the bottoms and tops. It's not a level or news or whatever else it is. It's because somebody sold the bottom and bought the top. They marked it. That's and it's not like liquidity adjusting or the market maker doing this. It is for the most part the active participant who gets caught offside. That's what I'm waiting for. Notice how there's a 21 and 14 at 94, 15, 32, 19, and then a seller steps in. I think I added to this trade. Now I'm kind of antsy. That's why I moved my stop. But realistically, when we see that sell pressure come in after the buyer shows up, that tells me I'm on the right side of the trade from an active participant perspective because of sellers. 93, we get lower, and then the floor defense at 93, the 11 is what I'm worried about, and then the plunge from buyers at 93.25 with 10, with 11, 10, 10, 9, right, etc. I think I scratched this trade because I'm like 4 ticks offside. The fact that we came down to 93 and sat there, which is a low volume node, and didn't get lower, so it makes me hesitant. I'm also kind of self sabotaging here, but I worked it for a 2 tick loss, and then I flip long and it goes against me. Where we're just watching 93 now, and we lose 93, and the market makers pull, and then the auction shifts lower. I get short here. I have to go back and watch that again as to why I closed and swapped. So that looks like noise. Yes, it was a poor entry, but that doesn't necessitate getting out at the center point of the distribution and then swapping. And notice a 28 trades at 93.50, and it's immediately rewarded. And we're underwater now. And the 11 trades on buy side 93.25, and two sellers show up. We can't get above 93.50, which is even more bearish. We can't get above it again, and 93.50 and 25 are the thin spots of the profile. And then this is a momentum breakdown on the thick spots of the profile 92 and 91.75. And for a second there, I think I'd try market making. Yes, I do because the yes, I do because the market is slower now. I should get out here because the ask wants lower. And they shift higher again. Alright, and we're sitting there, so I'm going to win this trade most likely. I just need the Q sell side to enter empty, and it doesn't, so now we get out. Sorry, my arm is sore again. I'm still trying to market make here. 93.25 looks like a good place to trade. 93.50, the sell right there looks good. The 13 being absorbed there, it doesn't really bode well. I pulled my order there. I'm still warming up here. Yeah, here's the big trade. Is one initial reversion, and then I'm building a position here based on liquidity pulling, buyers getting caught offside and price reverting. So I'm like hell or high water, we're riding it to high of day. Tape dries up at 96.25, and then there's 30 at 95 even, 28. So it effectively looks like my P&L came from this trade and then break even for the rest of the day from this big martingale, which means I'm still break even, which is nuts to think about. Not counting fees, I would be negative. We're going to speed through this. This is just market making. And that's me martingaling the VPOC. Then I pull the order and get out. This is the same me market making. It's funny that I'm going to write that down. All three. So we're going to stay away from market making. And then that's a continuation trade. But my beginner trades were like that anyway, little market making trades. That's a continuation trade at low of day from 13 being rewarded on 86.75. This trade I scratched, rightfully so. We're already offside big time, and I'm kind of hoping and praying here. The 3 tick, 4 tick stop would be great. I think I took a big loss here. Yeah, like 75. They can get down to 85, and I can get out. Yeah, because we're just notice how the inside prints are empty, and we're just ranging over the distribution here from the Q perspective. From a Q position perspective, from a Q perspective, see the inside prints are empty. There's nobody trading. It's just the market makers moving liquidity over a distribution. There's a 12 there, and then active buyers show up. They push it to 85, then they run out, and it looks like the market makers respond by blowing it lower. No, so somebody got out of a position there, and it jumped 3 ticks lower at the high of day. So it's just Neanderthal. It's just Neanderthal price action. It doesn't make any sense. There's a 47 there, which is what I'm trading against at 83.75. It's a real order. I think it's going to slip two or three ticks once we fill it. It doesn't slip, but we fill it. Sellers are rewarded there, and the price moves lower, which is great. Now it's 7:54, 8 o'clock. The speed of tape picks up by a significant margin, and things get really messy. I do worse in higher speed of tape environments. I should really be getting out at 8:30, but 8:30 it was so fast, anyways. I took a kind of a ham-handed distribution trade here, hoping that the 78.25, the 19 on the ask was the low, and it wasn't, and I got caught on the plunge, which is horrible. I think I scratched and flipped short. Notice how we can't get above something like 78.25. We're simply just forming a new developing balance area at 77.75, which is, so the best thing I did here was scratch that trade and get short. Worst thing I did was not extend my take profit because market makers, not active participants, pulled it lower. They hit a liquidity pocket at 75.25. It's probably somebody's stop loss. It's me changing my stop because the conditions are changing. Notice how we're accumulating at around 73, and if we got back up to if we hit a floor at 74, flipped it and got up to 74, 75 and balanced there, the conditions would change, would be bullish, but no dice, right? And I try to play this here, and I get caught offside. I actually remember being angry that price didn't accept, and we form this balance. It just means that there's tremendous opportunity to the downside because we can't get above that, and we're going to see unidirectional, one directional music one directional movement from toxic order flow to the low side as people get liquidated, which is why I spammed, like 3 orders there. If I could have gotten like 4 in, my execution is relatively poor. I should have just keybound like 4 contracts maximum on a fund that I'm going to be able to trade 5 and take in the scalp. Notice how we only triggered a 19 and a 22 at 71.75. Then I see 31 trade, but they catch me offside here. Realistically, 1, 2, 3, 4. Yeah, a 4 tick stop for that is good, but I took 8 ticks instead. So the speeder tape is picking up, and it's mainly automated market makers hunting for liquidity, is what I believe. That's why the queue is pulling so fast. It's getting too fast to read. It's already 8:09. That's why I stopped trading after 8:30, because things like this will happen. Sometimes it'll show up earlier in the session. The speed of tape picks up and it's not tradable anymore. But nonetheless, notice how we stop there at 73. I hope I don't scratch this trade. Yeah, yeah. Here's another big martingale trade. I get out because I'm scared, right? But I should have just held it. We're looking for, see how we're sitting at 71.75 at the end of the distribution. A 10 trades, so somebody gets caught offside. There's a 60 at 71. We're probably going to fill the 60, and liquidity is going to hit here. I'm short 3, which is great. That means I recognize the opportunity here. I know where the market's going because of how it's sitting from a longer term perspective. Now the question is 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 the liquidity, is the liquidity down there? Is it going to be a huge move from a lot of people getting out, or is it going to be like 1 tick, and then I'm going to get caught offside, and I'm going to think there has to be more, and the market's going to stop after liquidating 1 to 2 people, or 1 to 2 ticks, and I'm going to get caught offside or give away my P&L with something like a break even. So what really matters is the move has to be fast, and if it upticks 1 and it sits there, maybe having a stop right behind it, or another tick behind it would work. But it should be a plunge and then a stop and a plunge and a stop, and it shouldn't move up at all. If it moves up at all, what's most likely going to happen is the market makers again are going to pull liquidity. The move is going to end, and the book, from an active participant perspective, is going to empty. The market's going to revert back to the mean after the toxic flow is washed out. Toxic flow is order flow imbalance. It means when there's too many buyers or sellers, and so the market makers respond by widening the spread, and that's why the market moves so fast in one direction. I read that in a book. I skimmed, right? So there it is. That's great. And then I get out after the move from 2 ticks, because it's not a drilling. They did do that. The market makers didn't do that though. Notice how there's a 10 and an 8 and such. So buyers stepped in. Active buyers stepped in at 71.25, which is a great reason to get out. You actually want that. It's healthier if buyers step in rather than a market maker pulling. And now the market maker pulls. See, it's a liquidity vacuum. I read about this as well. I've been reading books. So when they know there's enough buy demand, when a market maker knows there's enough buy demand, they don't want to provide liquidity to these buyers, so they're going to pull the orders on the ask side, and that's how a liquidity vacuum in the ES is created. So it starts at 71.50 and 71.25, and then zoop, it jumps from 71.75 to 72.75 like that. And notice how like a 17 trades at 72.25. If there was liquidity to be provided there, it might be right there, but because the market maker pulled, he got slipped 2 ticks. They I have to read more books on. I have to read books on game theory. Somebody recommended them to me. That's why they pull. That's why they pull. They pull so they don't have to provide. They pull so they don't have to provide liquidity if they know the trade's a losing trade, and so the only solution is to rug the active participant by moving the book. so somebody else foots the bill. I understand these concepts on a surface level and from a more intuitive perspective than I do an actual mechanical one. So if it doesn't make any sense, that's not my fault, and it's your problem, and you have to figure it out. I don't know anybody else my age period who's trading the ladder at their grandma's house, so I don't have any point of reference. And I know most of you, if you watch this, are not trading the ladder. You're on a chart. We can't get above 76 here. That makes me think it's going to revert. But in reality, it's going to move to the upside most likely. Yeah, and then we get above, and so you could put like a return pullback trade at 76 there. I walk away. That was the best opportunity there. Notice that the profile is really thick now, and the conditions are worse because it's jumping up and down like that. So 76, 75. I'm gonna write that down. who, who did this? um, I have to write that down. Price sitting at val. So, I mean, that means there's lower. It's the same for value. Special context. I think that's it. And then I took one big losing trade here. It's a short. So we come down. I'll watch the whole thing. But notice that the tape is schizophrenic now. Back and forth, very fast. Can't trade it. You know, 4 to 8 tick stop, you lose it in like 3 seconds. We're not breaking lower. That would be the signal to get out most likely. See how the 20 is absorbed at 74, 75? It's and my hands are kind of slow here, so I really couldn't have done much. The fact that we get back up on low liquidity, on low inside prints period at 75.25, right? So the 20 trades 74.75, we can't get out of it. Then a 13 trades at 75. Get out, 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 right? Get out right there. And then I move the stop, and then I move the stop, and then a seller shows up. Somebody gets out of their position. That's why it jumps like 3 ticks lower. And you know, there's still more selling, and it just gets absorbed and moved higher and moves higher. I got off of this off of like a 10-minute break, and I came back to my computer and I threw in a trade. So we're gonna write that down too. Don't trade if you don't know the context. As for bidding value areas, we'll write that down too. Only trade value areas with order flow con. I still do that. I still trade with flow confirmation, but I just end up martingaling the trade for the most part. So, and I know that from a Grady video that you shouldn't position here. You should position here. So tomorrow, I already do that, so I don't need that. Larger value areas, thin spots and not at the 7 notch. I've written about that before and I ignored it, which is why I'm here.